Good evening, friends. It's a matter of pleasure and privilege to introduce today's two speakers, and they are the author of the book called The Health and Wealth Paradox: How to Use First Principles Thinking to Achieve Both. Very nice book it is written, friends, really, and I just have a very short discussion with authors. Uh, it's a kind of the experience he has written in the books, the practical life, what we are facing a day-to-day difficulties, those kind of the things are narrated in the books and how to achieve the goals in life and achieve both the things, health and wealth. So it's a very interesting talk they are going to make with us. Let me introduce both the authors. I introduce on my right the first one, that is Mr. Mihir Patki. He is an investment professionals with a deep passion for the personal finance and nutrition. He started his career at Deloitte before transiting to the various capital market roles with Bank of America, Merrill Lynch, and JM Finance from 2013 to 2020. Mir led CVK Advisor, a boutique advisor firms where he focused on special situation credit in 2020. He co-founded multiple a social network for investors that grew into a vibrant community of over a 1 lakh members from novice to a seasoned experts. So 1 lakh is very big number, friends, in today's scenario. And multiple was acquired by ICICI Securities in 2022. Mihir currently works with the Tata Capital Structure Finance team. So he is currently engaged himself with the Tata Capital, friends. And he is a chartered accountant by his study and holds an MBA degree from the Oxford. So with great achievements, I present before you Mr. Mihir Patki. So let us give a big round of applause, friends. The second author is a co-author, is Mr. Ankush Datar. He is also an investment professional, friends, health and fitness enthusiastic and writers. He has been working in the professional investing field for last 8 years and is currently associated with Phillip Capital India in their portfolio management services. So he is engaged in a PMS services rendered by Phillip Capital. Phillip Capital, friends, is a one of the big investment portfolio advisor for the resident and non-resident both. In non-resident, friends, this name is very common. The people are learning a lot about the Phillip Capital. So he's engaged in a PMS kind of services, friends. He's a marathon runner and weight lifter, friends. So along with that, both the things are his hobby and passions. Has been doing both for the last 15 years. He has also contributed articles to financial service publications, appeared on podcasts and written blogs for health tech, startup and brands. He writes a personal blog on investing, health and psychology and how these disciplines converge. So friends, with this brief introductions, I present before you Mr. Ankush Datar, who is going to talk on the subject, friends. Uh, Nothing to talk further, friends. We are eager to hear both of them on the subject, their depth of the writing, what they have made, what inspired them to write the books, what inspired them to follow the principles, and how they are managing the health and wealth both at the same time, where the world is moving in a different directions. We were discussing just before we come here that now the youngsters, they are much busy on Instagram and the YouTube and other things rather than doing all activity other than the real activities which required to be done for the life. They forget about the purpose of the life also. And at the age of 35, 36, we get a lot of heartache, we got a lot of cardiac disease. We are in the rat race of earning more and more money. Nothing wrong in earning that. We are not against the earning. But there should be a balance of both health and wealth. So in this regard, friends, we are very eager to hear from both of them on the books and their life experience they have written in it. So I will request Mr. Mihir to start with on the subject. And I would honor both of them with felicitating them here by offering a book from the Ahmedabad Management Association. So request Mr. Mihir to accept on behalf of the Ahmedabad Management. I would request as a mark of love and affections. I would request Mr. Ankush also kindly accept. So, mic is yours, friends. Let us have your views on subject.
So, good evening, everybody. Firstly, thank you, AMA, for having us here, giving us the opportunity to speak about two topics that we are both extremely passionate about. So, thank you so much, sir, for having us here. Amongst other things, today we'll talk about eating healthy. The joke is that I come here after having a very heavy lunch, which was arranged thanks to my friend Promila at Agashi. So the number of calories that I have had today are actually going to contradict what I'm going to say here. But the beauty of calorie counting or planning is that these once in a while so-called cheat meals actually are healthy for you if you plan them well. So that's also one of the things that we'll dive deep into. So before we begin, I just want to ask, how many of you have heard about or practice asset allocation? Great. Right.
Okay, now how many of you have followed calorie allocation? Okay, surprisingly, there is a hand up. There is a hand up.
Right. So what we want to say is that asset allocation leads to passive wealth creation. Similarly, calorie allocation can lead to passive health creation. How these two core life skills, one is fitness and nutrition, the other is personal finance or investing, how they converge, we'll see by way of this presentation. So first, let us explore nutrition. Any food can be broken down into three parts: carbohydrates, proteins, fat. Carbohydrates provide us energy, and the source of carbohydrates are foods like grains, fruits, dairy products, etc. Protein is the building block of our body, so it builds muscle, and the sources are dairy products, meats, legumes, nuts, etc. We also have fat. A lot of people confuse body fat with the nutrition fat. These are two very different things. We'll see in more detail as we go on. So fat primarily acts as the transport mechanism of vitamins throughout your body. And the sources of fat are oils, dairy products, nuts, etc.
Okay, now that we heard about protein, fats and carbs, let's break down some simple foods that we probably eat on an everyday basis and understand how the calories are derived for each and every food, right? So the first thing that we all need to understand is 1 gram of carbohydrates has 4 calories. 1 gram of protein has 4 calories and 1 gram of fat has 9 calories. This is the basic level understanding that all of us need to know. Now with this simple knowledge, let's break down the calorie count of these three simple foods. So a slice of bread, which most of us will be having every single day. So when I tell you a slice of bread has 32 calories, what does that mean? It means out of the 6 grams of carbs, 6 into 4, which equals 24 calories. It also has 1 gram of protein, which equals 4 calories, 0.5 grams of fat, which equals 4.5 calories. So anytime you hear the calorie count of a food, it's just a breakup of these three basic macronutrients. Similarly, the same thing would be for an apple. An apple would have 21 grams of carbs, equaling 88 calories. 100 grams of paneer would be having slightly more fat, therefore giving you 300 calories. So this is the basic level understanding which all of us need to have as to composition of foods of carbs, protein and fat, and how many total calories each of these foods have.
Now, our body needs fuel to run, and that fuel is food, and food essentially is calories. So we arrive at a question, how much fuel do we need? So how many calories do we need? And the answer to that is what is called as the basal metabolic rate. Now the basal metabolic rate, or BMR, is the minimum number of calories that your body needs to function. Right? If you eat below your BMR, you are going to face immunity issues. Right? So BMR, as the name says, it is the basal metabolic rate. The other metric is TEE, which is total energy expended. It simply means the number of calories burnt by your body in a day. Now, all of you are sitting here, all of us are alive, so our body is burning calories. If you are sitting here and listening to this, you are burning X amount of calories. If you stand up and listen, you will burn more than X. And if you don't listen to me at all and go for a jog outside, you may burn exponential of X, right? So what one needs to understand is these two metrics, and we'll now soon come to a mathematical equation of how these two metrics are fit into your eating plan.
Okay, so with this basic level understanding that Mihir gave you of BMR and TE, let's understand how the weight loss, weight gain and weight maintenance equation happens. Essentially, these three things boil down to a simple formula. It doesn't come down to whether you're having green tea or whether you're having super ghee or any super foods. All your weight loss, weight gain, weight maintenance come to these simple metrics. So for example, as Mihir mentioned, BMR is the minimum number of calories that each of us require. My BMR will be very different from Mihir's. Somebody here in the audience may be having a very different BMR. So that's the minimum you need, and plus the activities that you do equals the TE, right? So if I'm eating below my TE, I'm losing weight. Very simple. If I'm eating as much as my TE, I'm maintaining my weight, and if I'm eating more than my TE, then I'm gaining weight. Very simple. So very simple scenarios. At 1700 calories, right? If my TE is 2200, right? I'm eating 500 calories less than my body is burning. That's how I'm losing weight. Very simple equations, and that's literally all that is to your weight loss, weight maintenance and weight gain. At 2500 calories, which we are probably on today after today's lunch, is a 300 calorie surplus. But that doesn't mean I'm immediately going to put on weight. Over the next few days, if I average it out at 1700, 1800 calories, today's meal is not making a difference to my overall weight loss, weight gain, weight maintenance, and I'm able to maintain sanity. Similarly now, when we go on crash diets, when we try to eat much lesser, maybe we want to prepare for a wedding or whatever we want to prepare for, we tend to eat very low calories. But we cannot be eating less than our BMR. Because the second we start doing that is when we lose our immunity, and that's not something that we want.
So now that we've figured out how many calories we need, and your individual BMR and TE can easily be calculated by using online calculators. You can just Google for what is my BMR, or just put it in something like a chat GPT. It will ask you a few questions, your age, your gender, some body measurements, and it will come with your BMR and TE calculations. So now that we've figured how much to eat, the next question is in what proportion of carb, protein, fat to eat. And this is where the entire world will be talking about a keto diet, a paleo diet, a low carb diet. Diets are nothing but a mathematical formula of the composition of carb, protein, fat. So if you go very low on carbs, which is only 5% of your calories are coming from carb, 35 from protein and say 60 from fat, that's a keto diet. If you do a low protein diet, say 25% is coming in from protein, and this is typically followed by people who have issues like gout or who cannot process protein in their bodies. Or you do a low carb, which is something what I do, which is 25% from carb and the balance from protein and fat. Now comes the question, what should I follow? Which of these diets is good? Which is the best, which is the second best? The answer to that is, what is good for you is what is sustainable for you. Keto is a great diet, but can I do keto for 1 week? Maybe. Can I do it for 2 weeks? Definitely no. right? Can I do it for a lifetime? There's no question of it. So I follow low carb, which is something that is very, very sustainable given my lifestyle. Once you understand this, it becomes very easy to figure what is the diet that you should be following. So we come across two mathematical equations that I have to eat above my BMR, below my TE, and I have to eat in a particular composition of carb, protein, fat. So let's look at a practical example. This is what I'm currently eating. Okay. So I have all my meals counted. Everything that I ingest, I make an entry in Excel, at least in the beginning. And if you look at it, I am consuming 1700 calories in the proportion of 25, 35, 40 as against my TE, which will be somewhere around 2200, and if I exercise it will be more. So sustainably over a period of time, I'll start losing weight in terms of losing body fat and retaining muscle. Now I know what you are thinking, who's going to plan so much? This looks like a lot, itna time hi nahi hai life mein ye karne ka. But let me ask you, do you know your bank balance? I'm sure all of you know your bank balance as of this very second. Do you know what was the inflow in it yesterday? Do you know what is the outflow going to be there tomorrow? That is exactly what you are doing, but instead of a bank balance, this is, you call it your body balance. So you are aware of what is going in and out of your bank account, but nobody, and this is counterintuitive, right? Your health is much more important than what's there in the bank account. So one should be aware of what is going in and what is going out. Now this is not that difficult, although it looks very onerous at the first view. For example, I know that one particular katori in my house will have 100 grams of rice. How do I know that? Because I have measured it once. And I know 100 grams of rice has X number of calories. So tomorrow if I eat 2 katoris, I know exactly how many grams of rice I am eating. But लोगों को लगता है कि I'm measuring my rice I'm eating, so this is like a mad guy, he doesn't know what he's talking. But essentially I'm just measuring मेरे घर का ये particular कटोरी मेरे को इतना खाना है. Right? If you look at what I'm doing on a daily basis, I'm doing nothing but eliminating junk food. And what is junk food? Junk food is not a biscuit or wafer or chips or anything. Junk food is anything that doesn't fit into my plan. तो आज मुझे थाली करना था, and that probably was, I think 2500 calories easy with the amount of sweets and ghee that I have eaten. So yeah, so what that means is 500 calories का deficit I'll create over the next 5 days. I will not do a crash diet कि अरे अभी थाली खा लिया, अभी 2 दिन में कुछ नहीं खाऊंगा. I am not going to compromise my BMR, but I'll create that over the next 5 days. I look at it as debt. ये मेरे को repay करना है 2500, मैं 5 दिन में कर दूंगा. So that's the way to look at it. If I get bored कि रोज कौन lunch में सब्जी खाएगा, dinner में पनीर खाएगा, तो I have these recipe blocks. कि there's a different form of curry in say coconut or there's a pizza. So I eat everything. तो ये मेरा Excel में I just replace this block with a block in the earlier slide and I ensure that I'm around 1700 calories. Precision is not required. Awareness is required.
Nice line.
Yeah, thank you. Precision is not possible in anything.
But bank balance is possible.
Bank balance is possible. We will see it in the next part. So here are some common pitfalls. We eat biscuits and we are marketed digestive biscuits, nutritional, they contain all vitamins from A to Z at the back of the A. But they are laden with sugar. If you look at the calories, now with the knowledge that you have of calories, वो hide and seek का calories और digestive का calories same ही है. तो if I'm eating a biscuit, I might as well eat a hide and seek. No, why should I have a nutri-choice? And these digestive biscuits or so-called healthy snacks, no maida, no ghee, etc., they give you an illusion that ये healthy है तो ये आप खा सकते हो. So if I'm going to eat 2 hide and seek, I'll end up eating 4 of those digestive biscuits. So मेरा calorie count तो बढ़ ही रहा है, but I'm thinking यार weight ही कम नहीं हो रहा है, I'm eating healthy, what's going wrong? So this is a very common pitfall. Diet snacks, there's really nothing diet about any snacks. मतलब diet तो ये है, right? But all of these snacks, diet bhel, diet khakra, diet chuda, all of us have them in our office desk. वो शाम को खोल के everybody eats it and thinks that, you know, I am eating healthy. But if you look at the calorie count, you will be able to objectively answer, is this healthy or is this not healthy? Home food. Now, home food is certainly healthier than what we are eating outside, but one cannot say it is healthy without measuring the calories. Health drinks, we give our kids so many health drinks. I mean, me as a kid, I've grown up having, Bonvita, Horlicks, etc. Yeah. So all of that is just 60-70% sugar. So I give my daughter one simple banana, and that gives her much more nutrition than any of these packaged products can give. Yogurt, फैट फ्री है, ये तो सिर्फ दही है, बट उसमें कितना शुगर है, दैट nobody really counts. But the good news is that एक दही खाने से या एक थाली खाने से it's not going to affect you. It is years of sustained bad eating without realizing that lands you in trouble. So the good news is that you can eat everything in moderation as long as you are aware, not precise. The bad news is if you have been doing it for a lot of years, it's going to take some time for you to be able to correct that. So do I stop enjoying my life and eat like a robot as in this sheet? The answer is absolutely no. I'm talking to you after eating a agashi thali. So the only thing I do is just simple awareness.
So just to touch upon one point which Mihir also said, as per the FSSAI, there are 97 types of sugar which are allowed to be labeled as no sugar. So the next time today you go and you pick up any label, try to see whether one of those sugars are labeled as non-sugar by FSSAI. They probably are sugar, but just because of the regulator, you think you're not having sugar, but you are. Now, coming back to the conversation. Now, after we've understood everything about BMR, T, and we've achieved our goals. Similarly, how the people who are doing asset allocation for now, right? You achieve a certain goal and then you rebalance the goal based on your current requirements. For example, if I've lost all the weight that I wanted to lose, I don't continue being on a calorie deficit. I come back to my regular maintenance diet, and then based on my current goal, I keep rebalancing it, but I don't do something drastic. I just play around with the equation, right? And one of the important things that is often not known by people, right? What this slide says is more muscle equals to higher TE, right? So typically what we try to do is eat something. For example, we would have eaten this thali today. Now saying ki kal jaake bhagna hai and burn everything, right? But it's just like simple interest. When you do cardio, you run, you burn the calories, you eat, and then you put on, and then it's a virtuous cycle. But what happens with something boring like lifting weights or resistance training, right, is that your muscle that you're building is raising the amount of BMR, which we learned in the earlier part of the equation, right? And muscle requires more calories to burn. So actually the boring activity which is not burning you any sweat, maybe in 5 years it's allowing you to eat more than you ever could. Big paradox, right? So more muscle equals to higher TE, and after we've done everything, how do we know we're on the right track? It's not weight loss, it's not weight maintenance, not weight gain. We have to do a blood test. That's the final report card. Report card of all this exam preparation. I've given the exam, sab kuch diya hai. I mean, this is my report card, right? The blood test will tell you whether you're on track, your whatever, your lipid profile, your thyroid, whether you have diabetes, whether your diet has helped you improve these things. But as simple as it sounds, which it actually is, it's just playing around your nutrition plan and customizing it based on your lifestyle. That's going to eventually change your blood reports over time, right? And next. Yeah, so simple plan. This is my mother, 62 now. She didn't know anything, just like what Mihir spoke about. She did not know anything. She said, kya calories, who's going to sit and calculate, and who's going to sit and do all of this. Simple plan. She learned a lot of these things, moving around the diet, changing calories by reducing carbohydrates, increasing fiber, veggies, understanding the calorie equation. She lost 4 kgs. Did she do something drastic? Absolutely not. I wish I could have shown you all the plate. which was a before after, and it was barely anything different. It's probably very similar to what everyone is eating on an everyday basis. But she just understood the equation, played around with it, and now she's actually lost even more weight. So we should have updated this slide. But yeah, moving on. Yeah. So we've understood the first principles of nutrition, and you can literally apply the same mental models when you're thinking about your investing plan. Similar to how we have protein, fats, carbs for your nutrition, you have debt, equity, gold as an allocation, which each one serves a purpose, right? Debt is, of course, for stability. Equity, as we all know, most of us will be investing here, also building capital for growth, and gold, which has had a sensational run for diversification. One could also say it's for growth to a certain level. But just like our PFC formula that we had, although it's not exactly the same, but we can use the same mental models that we learned from the nutrition plan to accordingly curate an asset allocation plan for ourselves, right? And of course, an asset allocation plan is not straightforward. It's based on asking yourself unique equations, right? So of course, your financial goals. So my financial goals would be maybe to build a corpus for the next 20 years. So the allocation of my equity would obviously be much more, 90, 95%. But someone who's just retired, maybe they require some more stability, their allocation of debt will be higher. So the first line of asset allocation is not whether equity is good, whether this is bad. First, answering where you are in life and then curating your asset classes. Then, of course, your emotional quotient. When you're investing into equity also, many people go to stocks for thrills, but they just can't bear the volatility of stocks. They can't bear to see stocks go down 20, 30%, right? They don't know that the long-term journey of wealth creation actually requires that you go through these kind of journeys. So if you cannot do that, probably avoid doing stocks, do mutual funds. So based on your emotional quotient, curate the plan accordingly, right? And of course, the time spent. If you have more time, if you can study companies, if you can study stocks, right, spend your time doing that. If you cannot, if you do not have the time and you're balancing a career, it's better to stay away from stock picking and leave it to someone else to kind of fulfill your financial goals, which you've outlined in the start. Yeah. So this is basically what we just spoke about in a nutshell, but which you'll also be able to see in the book. On a table, based on your goals, you'll curate your financial goals. Your risk profile will obviously be tending towards aggressive or less aggressive based on these financial goals that you create.
So
yeah.
Essentially, what we are saying is that the far out your goals in time, for example, my daughter's education is much earlier in time than Ankush's future kids' education as a goal. So my daughter's education, that particular goal will have a slightly higher weightage towards debt, but Ankush may plan in terms of equity. So one must think why you are investing. You are not just investing just कि पैसा grow करना है. Of course, that's one of the reasons. But where are you going to use that money? How important that goal is to you? Based on that, you arrive at your risk profile and an asset allocation. Just like we saw a keto diet, paleo diet, there is no single answer to this is the best portfolio or this is the worst portfolio. It all depends on your individual goals and your individual emotional quotient. Once you have arrived at an asset allocation, it's really not prudent to abruptly enter into that asset allocation, because investments are also driven by external sentiment. For example, if you're starting out building a portfolio today and let's say you have let's say an 8% allocation towards gold and 92% split half between debt and equity. Given the valuations of the market, given the valuations of gold, it may not be prudent to immediately invest the entire amount. So one has to take into consideration where the market is at. And of course, these are very common metrics, and there are much more than these. But one normally looks at the price to earnings, how much of a earning multiple you are paying to acquire a particular business, how much of a market price you are paying in terms of the book value. There is a little allocation towards momentum because markets are not rational. They work on emotions, so certain weightage is assigned to that. Interest rate differential, it helps you think whether debt is giving better returns than equity at this point of time. Again, there is no right answer, but if you have an asset allocation and you are following it, you will be better than 90% of the investors. Right? Just like within our carb, protein, fat, I chose to eat paneer, I chose to eat peanuts. Similarly, within my debt, equity, gold, I will choose which equity instruments, which debt instruments, which gold investments. Now, if you are a stock picker, you may want to have certain allocation towards single stock. If not, simply having an index mutual fund or any mutual fund whose fund manager philosophies align with you, not necessarily the returns, is practically the best mutual fund for you. So in equity, if things seem too complex, just go with an index fund. You'll be better off than most of the investors. In debt, there are bonds available, there are FDs, there are debt mutual funds also, and gold has been, there are a lot of exchange traded gold options in case owning physical gold is a hassle. Typically, while looking at equity investments, these are some of the factors that I look at. Although stock picking is a subject in itself, and this short period will not do justice to that topic. But essentially, what I prefer is owner operators. So where the promoters have their skin in the game, their fate is tied to my fate, or rather, my fate is tied to their fate. The valuations are right in terms of not only comparing with historical valuations of that particular stock, but also with market comparables. I don't guess what's going to go up or go down. It's just suicidal. I just prefer buying something which is available at good value. Just like we ignore sugar, we ignore news on stocks because that defocuses you, and news doesn't really drive stocks in the long term. What drives is companies generating very high returns, reinvesting those returns in the business, and then compounding that business. So just like you don't want to play with your health by eating junk food, you don't want to play with your portfolio also by guessing or acting on stock tips, because every small amount that you lose is robbing you of the long-term benefit of what that small amount could have compounded into.
Okay, so just like in our nutrition plan, when we achieve a certain goal, we revisit the goal and we reconstruct the plan based on our goal. As Mihir mentioned, for his daughter, his debt allocation would be higher. For my future daughter's education, maybe my debt allocation, let's say we are 15 years down the line and I've reached that point, then maybe my debt allocation is going to go higher and my equity allocation is going to come down. So periodically rebalance it based on how you have answered that first question of asset allocation regarding your financial goals. As your financial goals keep changing, periodically rebalance your portfolio according to that, right? And automatically, of course, very easy to say, end up buying low and selling high. But if you can allocate your assets in a certain way after understanding these principles, right, then you have a better chance of doing this, right? For example, 1.5 years ago, after you had made enough money in the equity markets, if you had just diversified a little bit in gold, reduce the allocation, maybe increase some allocation in debt without being too greedy, you would have probably made more returns than what you would have made in a single equity portfolio. So you have to automatically, of course, balance the portfolio. Just because your financial goal is in place, if equity goes out of whack in your portfolio, pays heed to kind of sell when it's prudent and try to rebalance the portfolio as and when you can, right? So as we saw, very simple, the mental models of nutrition as well as investing are very, very similar. And how do they converge? Of course, as we understood, all of us should understand from this talk, right, that diets are temporary. What did we understand from the slide regarding the low carb diet, the ketogenic diet? It's nothing but a composition of carbs, protein, and fat. Right? It's just based on your goals, based on the requirements, you kind of move it around. So it has to be a diet which you can follow for 30 years and 40 years, right? That's the only way it's going to be sustainable, and it's not going to be a crash diet. And this we all know, but still we all fall prey to speculative trading is temporary. If I tell you a stock is going up tomorrow, right? how much of your money are you willing to put into that stock, and how often do you have to keep doing this? You have to find the next big stock every single day. So this is all a temporary phenomenon, and of course the most important thing is coming to your asset allocation. Define your financial goals and create an asset allocation
So
plan.
if you tell them a stock that is going to go up tomorrow, you are lying.
I avoid doing that generally, yeah. Because if I do that, you all will only remember me for that and not this talk, right? We grossly underestimate the food calories, right? So many of us actually, how many of us have tried to eat home food all our lives, not managed to achieve the results that we wanted to, right? It's probably because it's not the home food that's the problem, it's the total calories that we are consuming on the plate that is probably the problem. So the home food is probably not the demon. Maybe we've not understood the composition of protein, fat, carbs. Maybe what we're eating is not wrong, just the quantity and how much we need for our own requirements, right? Similarly, we grossly underestimate our behavior, right? I can tell you about a stock that is going up today with great confidence, and I probably, there's a 99% chance that I'll be wrong, right? But I would still do it, and I'll grossly underestimate my behavior. Of course, if you remember the equation now of calories in, calories out, BMR, TE, how much of that equation actually involved sweating and running 100 kilometers? It was actually just basic management of your food. Exercise, of course, not disincentivizing exercise, it's extremely important. But in that equation, if you saw exercise formed maybe 20-30% of the equation. So the next time someone tells you nutrition is 70% and exercise is 30%, it just comes down to that equation and moving it around. And of course, timing the market is important, but time in the market is more important. If you look at the returns of the stock market for the last 20 years, right? If you had missed the best 10 trading days, your returns would have gone down from 15% CAGR to 11% as you go down further. And how are we going to actually predict those 10 best days? So it's important to stay in the market. And actually, there are two interesting examples also in the book. Two multi-bagger stocks, which I will not name for obvious reasons. If you had not been invested in those stocks for the 30 days of maximum returns, you would have earned 80% less in those two stocks, which have gone up close to over 100x in 20 years. So time in the market is more important, right? And of course, crash diets, as we learned actually in the first slide, not sustainable. Lifestyle changes are sustainable, and that's what we want to be looking for. Same thing again, stock tips will give you, it's actually good to repeat this so that we hammer home the point. Stock tips may give you some quick returns, but like I said, staying in the market over that 15-20 years, not thinking about these stock tips is actually what's going to create you wealth. And that's the big difference, yeah.
So just like you saw my Excel, it was essentially creating filters for junk food. So I was just putting all food calories through that Excel, and whatever didn't fit, I didn't eat. Similarly, on my portfolio, having certain filters is very important. For example, minimum promoter stake itna hona chahiye, minimum ROC itna hona chahiye. Without that, I'm just not interested. So having filters helps you eliminate the bad stuff. You have to accept uncertainty, both in life and in investing. So there is no binary answer to which stock will go up, which stock will go down. Similarly, it's meaningless to ask, is quinoa healthy? Is ghee healthier than butter? It really doesn't matter. So one must ask the right questions. What is the calorie count of this particular food? Does it fit into my plan? What is the ROC of this stock? Does it align to my investment philosophy? Rather than simply asking, is this stock good or is this food good? Don't follow anybody blindly. The minute you see somebody else, market kya lagta hai is a very favorite question, and the second order question of that is kaun sa stock kharidu. What's worked for them may not necessarily work for you. You don't know their risk tolerance capacity. You don't know the valuation or the time at which they have bought a particular stock. Similarly, a diet that has worked for somebody else may not necessarily work for you. You should understand the core principles and try to create your own. Reading, of course, a community of readers is fast shrinking. Hardly anybody reads long form content. Similar truth applies for nobody reads nutrition labels before eating. If you just flip the packet at the back and just see the calories and directionally, matlab, if your BMR is 1700, if your daily eating plan is 1800, आप देखोगे packet of chips has like 600 calories. So it's, you give yourself a budget and ask if you can afford those 600 calories. 1/3 of your allocation gone in a packet of chips which has like 90% air. Similarly, before investing, read balance sheets, which hardly any investors do. Typically, it is कौन सा stock खरीदूं और क्या price पे खरीदूं, right? वो stock का नीचे revenue क्या है, returns क्या है, what is the valuation? Nobody really bothers. And if you ask these just simple 3-4 questions, you will be better than 90% of the investors. That's how easy it is. Eating healthy and investing right is more about what you don't do. If I eliminate junk food, I'll be healthy. If I eliminate bad investments, my portfolio will avoid accidents and grow. So it's more about, like Nassim Taleb calls it via negativa. So it's important to know what not to do, but everybody in the world is giving you advice on what to do. Avocado kha lo, it's healthy. Ye stock kharid lo, this is going to go up. Nobody is telling you what to not do. Simplicity is underrated and it's also very sustainable. Eating simple foods leads to a healthy life. Investing in simple products leads to wealth creation. Futures, options, we are discussing crypto, right? All extremely complex products, not going to make you wealthy. The stories that we hear, oh, this one made 100x, 1000x on crypto, is frankly hindsight and luck, at least for 90% of the people. This is my favorite slide. We all know the beauty of compounding, how wealth or anything for that matter grows over a long period of time. So walking is like simple interest. You are only burning calories while you are doing it. But if you are lifting weights, you are creating muscle in your body. And the higher your muscle, the more is your TE. So आप बैठे बैठे ज़्यादा calories burn करोगे if you have more muscle. So it gives you an afterburn. So resistance training gives you the impact of compound interest.
So yeah, just another case study. All the learnings that we had, this is my father. He was 63 and he's 66 today. Never seen the inside of a gym, type 2 diabetic, he's a heart patient. I also have all of these genetic conditions which I'll probably be passed on. His blood reports were considered, right, with all of these things. So what did we do? First, all these years we had neglected his health. Why not start with a simple step of creating a calorie allocation plan, being consistent with exercise, right, and focusing on resistance training, right? Sounds like as simple as the plan can get, right? And we'll go to the next slide. And now look at him. He did nothing magical. He's 66 today. He can deadlift 160 kgs, which most people my age cannot even dream about doing. He's reversed his diabetes. As of last week only, he took his blood test for his heart. His heart is also in perfect condition. As cheesy as it sounds, small habits compound over time. So as you can see, I'm not giving you any gyan, not giving you any kind of philosophical advice. I'm telling you practically how people have done it. And if this person can do it, I mean, probably anyone else can take away something from here, maybe take some inspiration and do the same.
Yeah. So in conclusion, I just want to say one thing, that both of these, health and wealth, are core life skills. But absolutely, you take any school, college curriculum, they don't teach you this. They'll teach you everything else in the world. My daughter, who's 10 years old, Ankush's dad, who is 66, what we have just said is relevant for both of these ages. So it's never really too early or too late to learn these core life skills. So this was the thought with which we wrote our book. And what you have seen in the presentation is essentially what we have expanded on in the book. Obviously, this was 30 slides. The book is 250 pages. So there are a lot of our personal stories also coming in. And I do hope all of you have enjoyed this presentation and you'll take home something. Right? So thank you so much.
Thank you.
Yeah, sure.
are happy to do a question answer, friends. If you have any.
The first question is, as financial professionals, what inspired you to write this book?
I can start with that. I think on a personal level, ever since I've started my professional investing journey, it's been now close to about 11 years. I observed a lot of similar phenomenons with my exercise routine, right? Seeing where the power of compounding. When you continuously do something, be disciplined with a financial process, be disciplined with an exercise process or whatever nutrition plan, the power of compounding actually plays out in a very similar way with similar principles. Most of the results that you get are actually in the fourth, fifth year. Most people actually give up because they are not able to go through the grind of the boring discipline reps, whether it comes even in investing. There's when you actually sit and invest your money, what is happening? There's nothing actually happening. You have to actually sit, give patience, or even if you're investing into maybe a mutual fund, SIP, in a very simple route, you're actually just continuously doing the process through the ups and downs, and you're actually seeing the results over that fourth or fifth year. Most people are not able to get past that annoyance which all of us go through, and I think once you see it, once you actually experience it, that's when you'll actually be able to start implementing it and telling and teaching people. That's one of the points. I think another one of the points which actually Mihir mentioned in the presentation itself is not judging a book by its cover. Like for example, we've given this talk and now you would assume that we are the healthiest people in the room. That's probably, I don't think that's true. Or you would think that we are the wealthiest people. You have no data point apart from what we have just said. So health and wealth is also invisible. That was also like an aha moment, and couple of other things which we've been advised not to talk for too long, otherwise we can go on, and maybe Mihir can also add his own.
So for me, it was a personal health situation. So I had hypertension, fatty liver, early onset of fatty liver, high cholesterol, etc. So some step had to be taken, and then I researched a lot, figured out how this entire thing works. And investing has been a profession for the last 2 decades. So suddenly there was this thought कि यार ये तो same ही है. वहाँ carb, protein, fat है, वहाँ debt, equity, gold है. There's really nothing different. It's only like a wrapper on top which is different. And like I mentioned also, it was this desire to write about something that will live on past me. It's knowledge that I want to pass on to the next generation. It's knowledge that can be useful, especially to young people who have just started out their investing journeys. So yeah, that was the thought behind writing the book.
Just one question. Your book is already in my Amazon save for later because I have just recently purchased books, so
Right.
I cannot ask my parents कि मुझे और books दो. So I will buy definitely. और अभी मुझे 30 सेकंड में भी पता चल ही चुका है.
Right.
बट अभी मुझे खरीदनी है कि मुझे 250 पेज पढ़ने हैं, मुझे वो जगह जानी है. बट माय वन सिंगल क्वेश्चन इज कि उसमें आपने जो बुक्स पढ़ी है पीवीआर वो मेंशन की है.
Yes, acknowledgement section में actually पूरा repository भी है. So when you buy the book, you can actually scan the QR code and see all the sources. वो आपको mention किया है.
आपने जो बुक्स पढ़ी जिसने आपको
हाँ, वो लिखा है. Acknowledgement में लिखा है.
then be it fitness or be it like I just like sorry.
Yeah, I think we are a derivative of all the books written before us.
That's all of us.
Yeah, all of us are. Yeah.
No one can.
Yes, please, sir.
What are your views for gold and crypto?
Sorry, for gold and crypto. So see. No, so gold, my view is nothing different from what I have mentioned here. I don't guess what's going to happen. I just do my allocation and wait for the flow to come. वो कभी ना कभी आना ही है, right? And if my gold allocation has now gone up significantly, because gold has almost doubled now, right? It's almost at what, 1,17,000 per 10 grams. And now if I have to rebalance, I'll end up selling some gold here, not all of it, but some. So my asset allocation, I don't need to have a view because automatically I'm going to be buying low and selling high. But on cryptocurrency, I do have a view. And my view is no different from what Warren Buffett and Charlie Munger have said. They have in fact not been so polite and they have called it rat's poison. While I don't want to give out such a negative view, but I personally will never invest in cryptocurrency, because if you see what I spoke about, even while investing in any stock, you are investing in an underlying business, right? It has some core value. Gold also has an inherent value, right? But with crypto, maybe it is my limitation. I don't understand it. And if I don't understand it, I won't invest in it, no matter how, whatever the run.
But many countries have now accepted as a legal.
Well, not really. I think it is only Argentina maybe which
Yeah,
accepted.
San Marino and
Yeah.
like,
Yes, maybe, but let it sustain for some time, let it become legal tender, then we'll take a view. There's really no need to, and I'm speaking from my personal perspective, there's really no need to identify what's going to be the next big thing and to invest in every big thing. My portfolio is doing right for my goals, and that's what I will stick with.
I think one of the other perspectives also, when you're buying equity, you know you're investing into a company, the earnings are growing at XYZ. You can predictably say where the company could go or the markets could go based on the rate of GDP growth. I think on gold, what are we doing? We're just speculating ki will China buy gold? We don't know. No one knew China is going to buy lap up gold. No one knows the pricing of gold. I think it's always better to have certain amount as diversification, because if you look at like 30-year data, gold and crypto has also actually done well. But even cryptocurrency, I would ask, can you answer the question, does it have any value of use? It's basically just a commodity that has no actual value in trade. Can you use it in your day-to-day purposes? I mean, what is going to be the long-term usage of crypto? If you can define that, then great. I think you should definitely be buying some, but this is not investment advice, by the way.
But I'll just add to that. Sorry, I'll just add to that. Many times what happens is our friends tell us stories कि यार मैंने तो crypto में डाल दिया अभी इतना मेरा 10x हो गया 50x हो गया. So for that, just for that scratching that itch, maybe you can have a 1% allocation, and it's like a thrill allocation. So if you are doing let's say 60% equity, 30% debt or 35% debt and say 5% gold, maybe वो gold का 2% कम करके crypto में डाल दो. So it at least satisfies you to some extent. It's like you don't want to eat the whole cake, but एक चम्मच या एक slice तो खा लेता हूँ so that I am satisfied. So maybe from that thrill allocation angle, maybe just to mentally please yourself, maybe it makes sense. Yeah. Yeah.
I will supplement. Just you have the question?
How we can know the fair value of gold? Is there any way or means to
No idea, sir.
That's exactly
No
what you
idea.
said.
Absolutely no idea. If
Later-
I had the idea, I wouldn't be writing and selling books and working for Tata. I would have been.
And
That's the paradox.
in stock or we can determine the performance or fundamental analysis, technical analysis? Is there any way to determine the price of the real gold?
Not that I know of.
so if you come to know, please let us also know.
See, in today's environment, I just supplementing the views of the author. Of course, they are the authority on the subject. I have very little knowledge on the economy and world economy. I am dealing in the subject for last about more than 35 years. And particularly the exchange, particularly world economy, geopolitics, that's my passion. I am basically by profession chartered accountant. Let me give a brief background about the crypto and the gold and the market movements and all. Of course, they have given their views. I would like to supplement their views, not to give the compliments or the contrary views. That will be my endeavor on the subject. I will take hardly 5 minutes to give you the perspective of the markets. The gold is a scarce commodity. It has a limited manufacturing capacity on a yearly basis. The ores is being processed. Let us say that in Africa there are many countries where the ores are available. It is processed and gold is being exported under the Switzerland marks or now Dubai markers. It has a limited supply. The economy in a world was earlier based on the value of the gold, which was discontinued by American President Nixon in 1971 by printing a petrodollars and delinking the currency with the dollars. So whatever today the value of the dollars, what we are getting 80 rupees, 85 rupees, may reach to 100 rupees, all these are the fundamentally incorrect, irrelevant, and it has to come down one day when the American economy will collapse. That is bound to be happen maybe in a 1 year, maybe in a 5 year, maybe in a 3 years down the line. Because there is a totally delink. Now linkages with the gold in world economy is happening. Either China is buying the gold or India is buying the gold or England is buying the gold. Every country is buying the gold. They have their intentions to put their economy again back to the track because now no country has a faith in another country. So there is a crisis of the confidence in currency with the countries. Therefore, India as on today is having about 831 tons of the gold as the reserves, official figure says, of 2024. China has 3 times more than the gold than the India, but the currency is not being valued accordingly. So it is undervalued in the world economics. The other economics is playing a very important role. Simultaneously, the game of the USA, we need to understand very clearly why the crypto is going on and why we should be keep away ourselves. What Mihir has said, I fully agreed, fully endorse his view. We can have a 1 spoon in the total amount of the diets. We should not more than that. So it is less than the salt. When we consume the diet, we are taking a salt because to keep the chemistry proper in our body, the sodium is required. So similarly, the crypto may be acquired to that extent for the purpose of the balancing our asset portfolio, but not more than that because see the crypto is having a limitation just like a gold. Why it has been famous? Let us understand the fundamental of the bitcoins and all that more than 31 million cryptos currency will not be get it printed beyond than that as per the mechanism developed by the Japanese scientists, and therefore it has a value. It has a value till the time the 31 million currency will be printed or built up or discovered by the mechanism. Beyond that, it will not happen. But today, why we are going up on a crypto saying that this currency is being circulated, being honored by so-and-so country. Friends, this is the trap going on in our world economics. I am giving this my message, recorded message. It is taking recording in a public domain very consciously that this crypto will not have any value one day after 10 years sometimes. That is my assumption and presumption, or it is my apprehension, you may say. The government has come out with the Genius Act. US government has come out with the Genius Act. If we are not studying, we should study the Genius Act. Genius Act is already in a public forum. Along with the Genius, the stable coin is going to be printed, linked with the dollars by the American government, just like what they have done. In the petrodollar, similar thing will happen with the dollar-based or the dollar-based the currency, treasury bills will be printed in a stable coin. Stable coins authority license will be given to the various agencies in 26, 27 onwards. It will not be linked to a really this one because just like today the government is printing in a ease quantity formula, UK is printing the pound, the euro is printed by the European countries, Japan is printing the yens. Similarly, India is not because India has a restrictions of printing the currency not beyond certain limit of 2.5%, 3%, the fiscal deficit. So we put ourselves in a control that there will not be any inflation, but these countries may be subject to inflation in coming way. So therefore what they will do is that the cryptocurrency, they will promote cryptocurrency in a large way. stable coins will be promoted by them. After 1.5 years or 2 years, the stable coin will be connected with the crypto. They will convert everything stable to the crypto. Crypto has a no promises. If you see, just take out the notes from your pocket and see that it is the promise of the Reserve Bank of India to honor that note. Crypto has, who is giving a promise? No one is giving the promise. So tomorrow, suppose the USA shut down the cryptocurrency not acceptable in their country, where will you go? You will have no value. You will have no value of the stable coin. The stable coin is linked to the treasury. Treasury becomes zero, stable coin becomes zero, treasury will become zero, the world will be in a crisis of 1930 similar situations. So this is the situations where the interested people of the certain countries are having a interest in a cryptocurrency because they are holding the licenses of the crypto. They are earning the money, just like the family of the Trump president. They are running a currency exchange in Pakistan, permitted now, doing a lot of business there. Their estimation, official estimation, is that they are going to earn not less than $6 billion in coming next 2 years. So kind of the wealthiness they create by the crypto. Crypto is definitely, it's a gamble, it's a game. You may earn, you may also make wealthy yourselves, but continuously holding that money, what important line of their presentation I like most is timing is important, but timing in market is equally important. It is not the timing at what time you should enter. You should enter and also get out of the situation. So timing is important and time in market is also important. So crypto you may invest, you may continue, but how long? It is a musical chair. If it is just going and going, if you are happy to get that chair, you will continue with that. If you don't, then you miss the bus. I'm sorry for that matter. I'm not competent what they have written it, but it's my out of knowledge. I just shared this, that these are the danger point one should keep in mind. Thank you, friends.
Just last question. In the cover, I am seeing that one is an apple and the other is a golden apple. So how do you came for this metaphor? Like what? किसका दिमाग में है?
So honestly, हमारा दिमाग नहीं था. This was the designer at Harper, and we were thinking कि क्या design करें. एक दिन हार्पर से व्हाट्सएप आ गया, दिस इज द डिजाइन, वी आर गोइंग विद इट, वी लाइक इट. तो आपने बोला वी ऑल्सो लाइक इट. सो द एप्पल इज अ मेटाफर फॉर the apple is a metaphor for apple a day keeps the doctor away. The golden apple is wealth and how you use one arrow to shoot through both. And we also liked it in the first instance. उस पे कोई discussion ही नहीं था. आ गया हाँ okay done.
But sorry to मैं कोई होता तो नहीं बोलने वाला, but मेरे हिसाब से जो एप्पल है उसके बाजू में एप्पल का लोगो भी लगा सकते हैं क्योंकि वो भी एप्पल है.
वो तो फिर वैसे भी रॉयल्टी ज्यादा आता नहीं है, जो आता वो भी स्टीव जॉब्स लेके जाते हैं.
देते जाएंगे रॉयल्टी, आता आएगा ही नहीं.
लेकिन अगर उससे कंट्रोवर्सी होती, बुक्स की सेल बढ़ती.
अगर कंट्रोवर्सी करके लिखना होता तो इतना सिंपल वाला बुक नहीं लिखते. बट यू नो, स्पीकिंग ऑफ रॉयल्टीज, जस्ट वांट टू गिव आउट अ मैसेज दैट whatever royalties we get, which is not really much, but all of that I donate to an organization called Roti Bank. It is run by a close friend of ours. He used to be ex-commissioner of police Mumbai, then DGP Maharashtra, Mr. D. Shivanandan. So he has founded this organization called Roti Bank, and it does exactly what the name is, which is essentially a bank for feeding people. So one of the thoughts also is that we are living in a world where we are worrying about excess calories, and there's a world where BMR bhi meet nahi ho raha hai. So that's just a little step that we are taking to ensure that whatever proceeds are there.
Since you mentioned that you personally had some health issues that you got and fixed up, did you, while studying this book or your particular diet, did you have any study about plant-based foods or naturopathy or something related?
So I did not, to be honest, go into too much depth into plant-based food. Sorry, because my belief was that if at a macro level, at a carb, protein, fat level, I am doing okay, there may not be need to be a super specialist in that.
So, friends, Very big round of applause to both the authors. Friends, really excellent book he has written, worthy to read and digest and implement in a day-to-day life, because lot of similarities he has been narrating in a books. That's what I understand from this. So we are very much thankful for the author for coming here and making this book to be inaugurated in Ahmedabad Management Association. On behalf of the Ahmedabad Management Association, I heartily congratulate to both of you and wishing best of luck for their grand success, and hope that in the next coming years they will come out with some more few publications. With this, best of luck, friends. The big round of applause to both of them, and thank you very much. Thank you.